at 10:30. It is Thursday. We're jumping into natural gas. We're trading at 429 right now. So first off, let's see how the 11 a.m. expirations line up. And what's going to happen is we've moved so much, right? I mean, for natural gas, dramatically, especially. I mean, most of the spreads are usually only 20 cents large in natural gas.
Right.
And even those very rarely get hit. But
right.
we're in quite a market. So the 11 a.m.s don't line up too well because when they got opened early this morning, we were trading up there at around 450, 460.
Yeah.
Now, what's interesting to point out here, though, is that let's just say you wanted to go bullish, right? Because they do line up in a particular manner where,
sure,
you know, one spread, what's nice is this is slightly out of the money. All right, you're able to buy it with defined risk,
yep,
where you're basically buying it a full 2 pennies above where the market's trading at.
Nothing now.
Right, but yeah, you're putting up 15 bucks,
okay,
and you have exposure all the way back to where it was, you know, an hour ago, right? For 11 a.m. Now, this is only till 11, but just keeping in mind when you get those types of premiums,
that's
it just lines
bad.
up. It lines up very close to where, you know, you're slightly out of the money. It's a slightly out of the money option almost. Interesting nonetheless. Let's jump to the noons. Now these are going to line up a little bit better, but you're still going to be 435 is your price point you could use for bullish and bearish exposure. You're 5-6 pennies out of the money on one. You know, that becomes a bias trade, right, where it's not a volatility trade. And let's just see how I think these are going to be, similar in terms of the 8 till 230s, 450 would be your price point you could use. Now again, here's what's interesting. The daily, let's see how this lines up. If you're looking for a bullish pop again. You got, now you were saying maybe you think it's going to maybe pull back, right?
No, that would go up.
Then it'll go up? Okay, then that's even better that these are all lining up.
Right.
I was just going to say, so now this one's open till 2:30 instead of 11.
Okay.
And you have 40 cents of exposure, and that's costing you 32. So you're getting in at 433.3, call it. So you're paying, you know, 3.4 pennies. We're at 431 now as we tick around. But that's not bad.
2.2 pennies. That's great.
You got 40 cents of exposure, and you have till 2:30 because the 11 a.m. that's a little bit dicey, right? You could just get, but 2:30 if you expect action today. So we'll see how those numbers come out. It's 10:25 right now. We get them after our break.
Welcome back, folks. So natural gas.
There's the number, right? Stockpiles rising 39 billion cubic feet. Median estimate coming in about 36. A little bit more oil than the market was looking for. And to jump how that shapes things up, wow, I was going to say more oil.
More gas.
Gas, thank you. That the price jumped down. It did to like 425. We're trading around 430. And then it just jumped up 7 pennies. And what did I say to you before that? This 1025 bar, before any news even happened, 6 penny wide bar, 5-minute bars. And then we get this bar, 425 to 432. We're sitting right at 430 right now.
Now, it's cool, folks, is that, you know, if you had any of those option trades, these option market makers are going to have to get used to natural gas moving a lot more than they basically priced in there.
Because you want to look at it, right? You could have been the one selling that premium. You could have been the person saying, I'll collect about 1.5 pennies for the 11. I'll collect maybe 3 pennies for the 2:30.
Right.
And that's where your market bias has to come in. But man, oh man, then that wasn't a big miss on the inventory number.
No.
You know, it really wasn't. And this bar is just... what did Kevin say? Violent price discovery?
Yes.
That's, I would say that applies right now to what's going on in natural gas. For sure. Let's check back on natural gas real quick, all right? We got some volatility for sure, so check it out. It's almost hard to remember. We were just sitting at 430. That's exactly, so we're 11 pennies now under that level. Now, of course, those trades we were looking at, they had a little bit of a bullish bias, and you did get a spike to even 432.8, so 2.8 pennies above where we're at. That was almost where your break even was for the daily. But man, natural gas just not stopping. I mean, we were just at 460 on the dot at 9 in the morning. You're talking about an hour and 45 minutes. We've dropped 41 cents.
Right. Now let's bring up that article. So listen,
where
you know, you talk about, this is where, folks, time goes so quick. It's like just hard to comprehend. And I know there's plenty of you tigers that have been out here with us for this long. When I bring this up, you're going to see, so I remember this so well. So this headline is, traders see Amaroth all over again as natural gas spikes. Now, this person who ran this company, folks, is one of the premier natural gas traders.
Okay. A huge hedge fund, I'm guessing. I was around, I was 26. I wasn't in the hedge fund natural gas following. So I don't remember.
So this is in 2006 that this happened, okay? And what had happened is that I think he blew up a $6 billion fund in one day.
Got
Yeah.
it.
Okay, so it was
Sorry,
just up a little. Yeah,
there we go.
He lost 6.6 billion, and this was in it was in like 1.5 days.
Okay.
Okay. And what it was is that we'll go through this for them so you can see this, how this, because what's happening in the hedge fund community, they think that so here's gas futures rocking up as much as 20%, while there was even a bigger surge in the so-called widowmaker.
You love saying that.
Yeah.
Hey,
well,
this is how you go ahead.
This is what it is.
Yeah.
The widowmaker is a spread between two long-dated contracts, in effect, a play on how big stockpiles will be at the end of the winter.
Okay. And there you scroll down because that's the chart of the spread.
And a dramatic move, the spread that's leading observers to draw parallels with the 2006 implosion of a hedge fund, Amaranth, which lost $6.6 billion on the two-way trade. That was it. So far, there's no suggestion that losses of that magnitude this time around. The gyrations are setting commodity markets abuzz because
there you go.
They're looking that something happened here.
So it's the difference between the March and April natural gas futures.
Yeah.
And that's where, so you're usually ticking around 20 to 40 cents, right? Give or take.
Yeah.
And man, it spiked up to $1.60, back down to $1.40.
Yeah.
Pretty remarkable that type of a spread spikes there. So they have people talking about a consulting group. Oh, look where they're based out of, Villanova,
Steve,
Pennsylvania.
You've seen Shark. You've seen him.
Perfect.
Yeah, I've been on CNBC with him. Yeah,
yes.
right.
So he's talking about that it could be that Amaranth all over again.
Yeah.
So gas delivery in December closed 18% higher at 483.7.
Yeah.
Let's see, on Wednesday, the biggest one-day gain in 8 years, and it's talking about how it's pairing the gains today. And so, yeah, the maximum price limit for futures raised twice on Wednesday. You were talking about this, although there was no trading halt. The move of more than 30 cents triggers a circuit breaker, but once the front month contract surpasses that mark, the caps automatically increase to 60 cents until the close. And the initial circuit breaker was expanded to 50 cents. So a lot going on there. And they don't talk about the two contracts, but nonetheless, I mean, you know, we were talking about it yesterday. Okay, here we go. So another gentleman, another person, Ozer, echoed Shork and others when he added that the rally seems to be driven by more than simply fundamentals. So here's where they talk about the two contracts, I think. Cover the bearish bets on the March versus April 2019 futures. That spread widened to as much as $1.75 from just 30 cents 2 weeks ago. So you could see how those types of multiples. But even just trading natural gas, we talked about it yesterday. The speculator level per contract on the futures was about 2,600.
They only put it up to 3,000. Listen to this. I just saw it. I couldn't believe that that's all they did.
And they're going to close those people out too. I mean, that's so. But I agree that. But that's
3,080.
Yeah.
It's nothing.
It is, and it was at about 2,600 yesterday. So,
and we already moved 5,800. So,
yes. Yeah. So every point, every dollar in there is 10,000. So like you said, 60 cents. You better speak quick. Well, now we're at 60 cents. So that would be a $6,000 move. So in essence, you're right. You get twice your investment. I mean, that'd be like putting up 10 grand to hold an Amazon stock, but guess what? It's moving 20 grand a day.
Well, look, there it is. So you put up 3,000.
Yes.
And you're holding 42,000.
Right.
That's.
And that is. I mean, it's just you're holding 42,000 because it's sitting at $4.22. Right. You know, every dollar, as in what's your maximum risk? You buy a contract. Maximum risk is it goes to zero. That price represents $42,000 of basically. It would be, you know, every contract. It's like if Amazon was trading at 42,000, you have to put 2,600 up to own a $42,000 share. Now, natural gas can't go to zero. Amazon could, right? A commodity does have a value, so it's not quite the same. But Amazon's not going to zero, man. So it's pretty wild, similar. Man. It is pretty remarkable. We'll check back in on natural gas one more time as we wrap up the hour as well. Quite a run of natural gas to the downside. It's not stopping, man. We're at 416. We're down 14 pennies since that number came out, and we were just sitting at 460. Nonetheless,
we got to get some more premiums in those.
Whew. I would not be the one selling premium if you're only going to give me a penny and a half. No way. Yeah.